Hey traders, this is Christian from Tribeca Trade Group, and this is a weekend video. I'm actually going to be shooting two videos today. It is Sunday, August 19th, and it's a pretty nasty day outside, so a great day to to get some research done. But one of the things that I wanted to talk about is just what we started to notice last week in terms of a little bit of trend changes, and I actually sent out a poll last week, just kind of getting a feel for what people were thinking in terms of growth versus value. So I'm going to bring up a couple charts, and I'm kind of going to explain a couple of these ETFs and a couple of, maybe some trends to watch for next week. So what did I put in here? Probably most people have never heard about these, or they have to get themselves a little bit comfortable, and maybe some people do know what they are. But IWD, there's a couple different ETFs that if you just wanted to play growth or value, you can do that with with these Russell ETFs. Or you could do this. So these are large cap. IWD is the large cap value ETF. So there's 1,000 large cap names in here versus the IWF, which is large cap growth. So there's approximately 1,000 growth names in here, and it's kind of interesting to take a look at the two charts one by one, and then look at then look at the relationship between the two. The result of the poll that I sent out on Friday was that it looks like a little bit of my question was which is going to rip higher. So I did kind of put the question so that people answer it to think, not just maybe outperform one another, but I want to know what people are thinking. Is there really a trade that's happening? And overall it looks like 33% chose value over growth, but there's a lot of people, 40% chose neither. Neither is going to really outperform. So I think that's really interesting because still people, regardless if you're in the value camp or in the growth camp, still there's a lot of people that don't think much is really going on here, and perhaps some people are bearish in that category. I didn't really give a bearish view of either one of those, but just a little bit of sentiment that I'm reading into this is that there's still a lot of people that don't think that either one is going to really go up, or maybe the overall market. So I think that's a good sentiment sign. It's clearly been one of these markets that not everybody is involved. There's been doubters over years. How many times do we see this? If if you're on Twitter regularly, there's always somebody putting, especially on the weekends, putting up a comparison between now and the 30s, the 20s, so everybody's looking for a crash. Not everybody, but there are a lot of people that think that okay, we're going to crash. This is it. So there's this continuous feeling that basically not everybody is in. Not everybody is all in. And sometimes that's why the market continues to go higher, because there are those incremental buyers that have to come in, as we are continuing to move up. But so I wanted to cover the 40% that said neither, because I do find that interesting and possibly something that you could take away from that. So if we look at the relationship, before I go into the charts of the individual, the growth versus value, let's look at the relationship. And I've got a 5-year chart up. And a couple of things that I've noticed, or that I see in this chart, is really because again, value is in the numerator and growth is in the denominator. So really, growth has been outperforming, and it's at I guess a 5-year high. And you can go a little bit further back in these, and you could see that this kind of peaked out where value outperformed growth, actually, even before the financial crisis. And I think that because IWD, there is a fair share of financials in the value ETF. That's probably why you started to see growth start to outperform all the way back in. It looks like it was really halfway through 2007 that this relationship started. And this is where value was outperforming. So that has switched, and that's been going on now since 2007. So we're basically past 7 years of outperformance growth over value. But notice we've really, over the last year, if I go back to the 5-year chart, there was a little bit of outperformance, right? There was a rally here with value, especially towards the end of the year, where financials really rallied pretty hard after the election, and things like industrial corporations, defense, aerospace, defense spending, those areas really outperformed towards the end of 2016. And then really growth took over the driver's seat in the beginning of 2017, and it's been that way ever since. You've had a little bit of, you've had some of these snap rallies with value, but it's really been growth since the beginning of 2017 on. So one thing I could say is at this point, value has not turned the corner yet. It is still, below the 50-day moving average, and overall, it's starting to look, I think, a little bit cheap to growth. So again, there's no real buy signal value over growth, other than the fact that it's gotten pretty cheap. Value has to growth. So let's start to look at the individual charts. And again, these are just large caps, right? So you have to understand that we're just dealing with the large caps. So I will look at there's two ETFs that you can look at for the small caps too. I'm going to look at those both. But let's look at IWF first, right? Because that's been the leader. So let me just zoom out here because I think I was just waiting for Thinkorswim to adjust. And you can see we're kind of, we're very close to 52-week highs in this ETF. So first of all, what's in it, right? When we're talking about 1,000 different names, it is important to see if there's a few names that are really giving you a good sense of outperformance, or if it's pretty evenly distributed in terms of the ETF that has, again, 1,000 names in it. Well, Apple's actually 7.8%, and that's really been outperforming Microsoft, Amazon, Facebook, Google. If you add the two Googles in here, you get to so probably right around the same weight as Amazon. You also have things like United Health in here, Visa, Home Depot, Boeing, MasterCard, AbbVie, Nvidia, Pepsi. Actually, Pepsi's in the growth, which is interesting. So is Coca-Cola. You would think that might be in the value. But again, taking a look at this, those are your biggest weights, and of course the FANG stocks are up there, but a number of other growth stocks. So that again is IWF, and you could see we could hit 52-week highs. There's no question about it. There's no sell signal here or anything like that I see. We have not been able on this little peak. We have not been able to take out this recent high, but we're right there. So, all it takes is a little bit of a rally further, and growth could be breaking out, after this little consolidation. So I think this still looks good, and I don't see any real damage here or a sell signal or anything like that. If we look at the IWD, maybe there might be a little bit more bang for your buck here. And I think what you want to take a look at is possibly an MACD crossover for confirmation, which it looks like it's close to doing that. And then to get over this, so since the beginning of July, it's actually been in a nice in rally territory, but we're not even close to taking out the high of earlier this year. So if we could get out of this area, right? This is the February peak. This is the March peak, and I guess you could call this a mini peak here in the beginning of the month. We could be on to some greener pastures here. So this looks pretty interesting to me, and I think this sets up for a long. Again, it would be nice if we could get over this 120, call it into the 127 handle. I think that would be your confirmation. And if that fires off, you could bet that there's going to be an MACD crossover too. So I like this. I think the RSI has been improving. From where it from where it kind of went down to 35, it's been making a lower high here, which I think is pretty good. You could probably draw a trend line right in here as well for value. So I think you can make the case for value here if we get above 126.50. So just like I was doing with IWF, let's see what's in this in terms of the top holders, because again, you may, these ETFs, again, you don't have to necessarily go long or short one of these. You can pick out your individual names. You could look at the overall trend, and then you can go ahead and start digging and looking for individual names. But JP Morgan is the top weight. Also, Berkshire is up there. Notice you don't have a big skew. In the IWF, Apple was by far the biggest weight, really has rallied pretty hard. So that's why it's the biggest weight. But you could see the largest weighting in here is JP Morgan, which is not even 3%. So it's a little bit more evenly distributed. J&J, which has been on a nice rally. We've been seeing call buying in that name. But you could see there are some financials that are, kind of skewing the weight there a little bit too. We see a bunch of them in the top 10. You also have names like Cisco that's in here, Chevron. So you get some energy in here as well. Dow, DuPont, Walmart, which obviously probably upped its weighting in this ETF or index because of the performance last week. But you've kind of got a mixed bag of things in here. And if we look at this in terms of the sector allocation as well, you could see. Let me just get over to the allocations on Bloomberg, which is really nice. It gives you all this information very quickly. But you can see energy is a big component, as are banks. Pharma's in here as well, insurance, which also belongs to the financial sector. So if you add insurance and banks, you're looking at about 20% of there. So if you don't want to be that heavy financials, that's where your stock picking ability could get into. All right, so that's a little bit of an overview. That was what I asked about in this survey. And so I do think I think both can rally. I don't think it has to be an either or. You have to ask yourself which one might have the bigger bang for the buck. So I'm leaning a little bit towards value myself right here. Maybe I don't want to be that heavy financials, and maybe that's what's holding it back a little bit. Maybe the energy as well. So you can go ahead and you can pick and choose individual names rather than playing the whole thing. But strictly speaking, the ETF, I think 127 would be your area that would be interesting if we get back above this. So if you look at this in terms of small caps, which have outperformed this year. So if we bring in, so this is IWN versus IWO. So a little bit different. Let me just expand this a little bit. There we go. So IWN, as in Nancy, is your small cap value. Okay, why can't I see the bottom of this screen? For some reason, it meshes in with everything else. So IWN is value and IWO is growth. So this one seems to be, so this is a 5-year chart, and we could go ahead and just like we did with the other relationship of the large cap, we could look at the relationship going all the way back as far as it exists with these two ETFs. Again, the ETFs are a little bit newer. These were only around since the year 2000, so we only have that much data. Now you could look at the indices, but I think for the purposes, I just want to go back, and look at the last, 18 years at this point is good enough. So this one seems like there isn't such a defined relationship. It seems like they're both kind of not as the relationship doesn't stand out as much as it does with the large caps in terms of the outperformance versus one another. This one, it seems like just value has been outperforming since, remember what happened back here in 2000, right? That's when the growth names went crazy. So value actually outperformed for a number of years up until about 2002. Remember, again, you had the dot-com bubble that happened right around 2000, 2001. And even before that, which I don't have on the chart, 1998, 99, and 1999, where value absolutely outperformed growth. But from 2000 on, I think until about 2006, just like we started to have, and I guess here it went to 2008, but I guess from that point on, really growth has been outperforming. Now notice this 2015 to 2016, again, same thing as we saw. If we drill down to the 5-year chart, value did outperform greatly right after the election of 2016. Big move up for value. And then right at the beginning of 2017, just like we saw with the large caps, growth has been outperforming. But in the last, so if we just to concentrate both on both these relationships, if we go back to the 1-year chart, or maybe the 5-year chart is what I want. Sorry, this is still IWN and IW. Let's go back to the other one. Let's go to the 5-year chart here. You can see that this is not really bottomed yet. Maybe that's starting to do that. but it looks like this one, the two value and growth in the small caps have been doing kind of exactly the same thing. There hasn't been any major outperformance between the two. All right, so let's look at these two charts individually. And let's start with the growth first, because again, I think that one's been the outperformer. Again, just like we saw with IWF, it's consolidating here. It hit a high in June, really nice run in June, and it's been consolidating a little bit. So, for the last 2 months, it did not make a fresh high here, but man, this is damn near close, and I don't think you really want to split hairs here. This is right back basically to the highs. So it did sell off at that point. Here was a little bit of a buying opportunity, but it's been really choppy, I would say, for the last couple weeks. And, we're not too far from either breaking out, or if you want to be a little bit bearish here, I would watch the 208.15. Until then, I don't really think there's a signal. So I would watch that 213, call it 213, round up and say 213.60 or 208.15. And you kind of have to wait until that happens before you could really take a big view. If we go to the value, again, small cap value, take a look at this. So I will confess, I did put on a long trade in IWN towards the end of last week because look at this is called coiled, right? When you have, I think it's officially 3 moving averages. Certainly, there's been 2 that have been tightly wound together, but the 50-day moving average, which is the purple line on my chart, is now in there as well. So this is definitely coiled. And this has been going on since June, where this has been in a very, very, very tight range. So this, we just got above. So I did get a buy signal in this one, which is above this one. I think it's 134.80. So that could be your support if we get back in here. Sometimes these things have a way of giving false signals. So I'm not completely convinced that this is going to break out. I want to see a little bit more evidence. But I think we will be getting some type of a big move here. Because I've certainly seen this sometimes where we start to go down and then all of a sudden we whip back the other way. So I would be very, careful watching this the next couple of days just to make sure that this continues to rip higher. But I'm in it, and I did put a trade. I think I went out to December. I don't have my account up, but I think I went out to December to kind of give this a chance to play out, even if it decides to get a little bit more coiled. But I think it's ready to go in one direction, and I'm playing it to the bullish side. All right. So, and again, what kind of spurred me to look at this analysis is, this was a couple weeks back. I want to say either 2 or 3 weeks back, where we saw, a particular fund did do a rotation out of growth and into value, which again will create one day a big move one day in these indices, and then once they're done trading it. And I think you can probably find that in, if we pull up a chart here, you could see this volume, which I think was here, and a player actually, I say player, was it was a fund who sold out of small cap growth, and they actually went into they took money out of growth and they put it into large cap value. They did not go into small cap value. They went into large cap value, and you could see that here with this volume. So yeah, it was about 3 weeks ago. It was the end of July. 7/27 was the day that they went. Oh, sorry, that's IWF. I have to remember which ones these are too. IWD, which was right in here too. Again, didn't have as much volume as some of those. But yeah, so we already saw one rotation a little bit out of growth. Again, these are huge. These are huge funds. So just because one particular fund decides to do that rotation, it doesn't necessarily mean the whole thing is going to continue to move. It has to be kind of the whole street really taking over that view, or I should say adopting that view. All right, so this video is just coming upon 20 minutes. I think it's interesting to look at these concepts because if there is a bigger rotation, you want to be aware of it and you don't want to be stuck with the growth. Sorry, I don't want to jump to the punch, but you don't want to be too far over the tips of your skis in growth or value if one rotation starts to take place. All right, so that's just one particular topic I wanted to cover, and it's already 20 minutes. So I will be doing another video on just overall strategy for the week and definitely some individual names that I have my eye on, some of which were option flow, some of which were not. So I'll have that ready to go next. Thanks for watching. Enjoy the rest of your weekend.